Hi everyone, good to see you all. This is Samir Singh Jaini here from the Digital Fifth, and happy to see all of you there. Hi Atal, hi everyone.
Hello everyone.
Hi, hi Samir, hi Shashank.
Hello
Hi,
sir.
well,
Hi, sir.
hi,
Hi.
hi. So, as usual, I think the focus of the session is primarily to get a view on how to build an open bank. And before we go there, I think I will give you a bit of an experience we are facing in the market as well. I think when we're going to the market and talking about open bank, seeing that a lot of people are not able to visualize what where, and there's also a contest that when they think of working with platforms like Perfios or they work with the Authbridge, they think that those are the platform which is open banking for them. So consuming third-party APIs is becoming more of a sort of focus area for them rather than actually realizing that they themselves can actually do business on top of that. So I think that's a one pointer which I see. Shashank, or maybe anybody can remove my admin rights because I'm actually getting a prompt on the face. So maybe you can remove my admin rights. Yeah. So I think the point I'm just saying is that the market is changing a lot. And what was I think when 2 years back when we started this course, and that's why Shashank had joined us 2 years back when we started this course, and he had conceptualized. I think we were in an early journey. We were talking about how the market is moving, but we have seen in last few years, maybe last couple of years, dramatic changes, and we have seen ICICI Bank. Maybe it was somewhere in the market to now it's taking a sort of leadership position. Yes Bank, despite going through so much of trauma, has come back and doing so well. Federal Bank has taken a lot of focus on this, and if you look at their platforms, the kind of APIs they are producing, the kind of frameworks they are able to create, I think, I'm not generous when I say that they are doing one of the best jobs in the country. So I think the market has changed, and it's no longer about top five banks or six banks doing it. I think we are seeing right now we are working with a small finance bank. We are right now working with a private sector bank, and I'm working with, let's say, NBFC. Everybody's talking about the same thing. Said, can I sell somebody else's product, and can somebody else consume my product? Can I be part of some journey, right? So for example, right now we are building a journey for fintech, and the journey is very complicated because they're working with bank for originating the loan for them, whereas also they're working with various multiple platforms, merchant platforms, where they're also trying to figure out how do they can get into this coupon world as well. Now these frameworks are complicated to understand, and when we are thinking of it as saying I have my product and I will sell, I think the more you think about it, more it will be sort of a pain point. And we also have to remember that we are still coming from the old world. In the old world, when DSAs was selling our product, that is also a third party sales, or banks selling bank assurance, right? Bank assurance was always remained a big platform for them, or big area for them. I think that was also an area where they were able to make money. So the banks structurally know, but since technology and APIs and open banking are as a concept are not known, there's always a pushback we see in the market. So this session is also to sort of call out that it's no longer about fad. It is no longer about saying that I should have an app. It is no longer about that I should have I already integrate with Perfios or Authbridge or somebody else. It's about also thinking holistically, and from open banking first, or mobile first, we have moved to a sort of API first. And when you go API first, certainly everything in the market will change. So that's the focus of today's session for all of us. And what we will do is we'll run this session for maybe 30 maybe 40 minutes, and my suggestion is that all of you can keep sending your questions back to the administrator, and maybe Shashank or somebody else will take those questions after maybe 15-20 minutes. We'll take more questions as we go. So idea is to be more interactive. So normally our sessions are more first a session and then interaction. What we will do is we'll try to have more interaction in this session so that we sort of can correlate. So again, welcome to all of you. Today, me and Shashank will try to take this session. My name is Samir Singh Jaini. I'm part of the Digital 50 team. And Shashank is also a co-founder here. And we primarily work only with fintechs and digital finance. And that's the only space we are aware of right now in the market. I think this is a quick background. Many of you have already attended this. So you can consider as an alternative Big Four, but only for this segment, which is digital and BFSI. And I'm being very honest that maybe whatever I'm saying right now is true. may not be true after 3 years because the market is changing fast. I think the kind of work which is happening on embedded finance is also extreme. Today we are talking to the guys which are some of them are in manufacturing sector, some of them are in completely, I mean, just imagine spectacle segment, and all of them are actually building the open bank framework, saying that can I do end-to-end servicing for the client, not for only financial services perspective, but the entire supply chain, and can I bring it back from the lending perspective as well, and the payments perspective as well, and the insurance as well. So that's where we are heading, and therefore we are learning more and more about this new segment which we had no clue about. I think many of you are aware that we do primarily consulting. We work with a lot of banks, fintechs, and all, and we are eager to work with each one of them. But we know which one of you. Partnership is big for us, so we also are organizing an event which is just right down the corner next week, actually same day, Wednesday, where we have to have B2B meetings. So if you as a buyer you are interested, you can share your feedback. If you as a seller you are interested, share your feedback. But it's a crucial or critical placeholder where we basically engage the ecosystem. So very difficult to explore the market. So what we do is we curate partnerships and bring it back on the table. So that's the business model which we have. Do business more for you. And of course, trainings are there. We will talk about some trainings as well. What we spoke about is one-on-one meetings. So as you said, if you are interested, it's done on Zoom itself, but very, very clinically done. So you will get maybe, if you are as a buyer coming, you will get in 3 hours, maybe something like maybe 8 to 9 fintech partners. And if you are also coming as a fintech partner, maybe you will get maybe during the day 7 to 8 during the whole day. So that's what it's right ahead. This is the placeholder. You can talk to Shrikant and get an onboarded. Then of course we do training. So open banking training is coming up right away. And after that, we'll have a session on also on digital payments and then digital lending. If you're interested, you can join as well. And executive program is also running, which is the next module is coming in September. If you're interested, again, it's a holistic program and you can take feedback from any of the current participants. We have almost 45 people running this course and they'll be coming out in August. So around August end or September, we'll start our course. So if you're interested, you can also join that. And the cohort is just started, and we also do placement assistance as well. So if you're looking at placement assistance as part of this long-term course, not short-term course, we are happy to sort of provide support to that. With this, we move to the key agenda of the session, which is open banking and what it is, how the Indian ecosystem working, what is the various models which we see in the market, and of course, then how do you build it as well. So these are the 4 sort of tenets. I know it's not easy for us to cover it in this period, but I'll try my best to sort of get it up and running. Shashank, you got your network back?
Yes, at least it's showing green.
No, it's not there. It's not there, Shashank. It's actually still lagging.
Okay, fine.
Yeah. So we'll just hold. Maybe if it stabilizes, we'll try again.
Sure.
So I think first, before we get into open banking, we have to define API banking. And most of you are confused between API banking and open banking. I suggest you don't bother about it. Don't try to define it each other. What is this and what is that? Doesn't matter. Doesn't matter. Actually, they are so close to each other. It's like digitalization and digitization. I don't know why we want to define all that crap, right? It looks very similar. I mean, I know all my life I've been doing the same work. And we just try to define some company says this and that, and we try to differentiate this. Don't worry about it. Finally, it's about the impact. So APIs are what? APIs is basically a framework or a technology framework by which 2 apps, 2 platforms, 2 servers can talk to each other. That's largely what it is. So let's say within the Paytm app, you are able to do a payment for your bill. So biller gets sort of credited, and through UPI, some of your bank is getting debited as well. This whole game of multiple APIs getting run is a classical case when in PhonePe you can do all the transactions. You can even buy gold, but all of that is underlying is apps, APIs working and ensuring that it's all real time. You wouldn't be very, very unhappy with, suppose if you want to buy, let's say, recharge your mobile, and recharge takes maybe once you pay, it takes 2 hours to recover. I don't think you and me will like it. So it's about real-time transactions, what it is supporting right now. And banking is a world where we're used to real time, because if in prepaid or maybe on a card, if you swipe your card somewhere and it doesn't work, I think the RBI will come crazily after you. But if you are in insurance and if you're not able to pay back, Right now, I don't think IRDA is very conscious about that. So payment takes hazard time, right? We all know that. So I think banking world may definitely, but APIs also are coming up in insurance business as well. And we are now looking at a lot of insurtech which are providing a small ticket APIs as well, which means that let's say 2 rupee API or 1 rupee API for insuring you only for the ride. For example, Uber or Ola, can you cover only for that ride? Those kind of products are also getting built. So basically, what will happen is that through APIs, one API or another API, one app within the app, a lot of that work, collaborative work can happen. It also acts like a doorway, so it can control what kind of transaction can flow in, what kind of transaction will not flow in. It also helps us in adapting to the market. So for example, UPI as a framework, it's primarily about a standard APIs which has a governance and framework available with which everybody is collaborating. So we think that India's best payment frameworks is UPI, but it's largely a set of structured governed APIs with a good settlement structure kicking in. So for example, APIs are all processed and they are considered that post that the settlement happens between various banks with RBI with NPCI's guidance, and that money moves on. But basically, first level of interface, is all APIs which are normalized and sort of aggregated, right? And of course, it's access filter as well, right? So what kind of access you will need, encryption, complexity, controls, fraud management, all of that you have to ensure that those APIs should manage. Otherwise, you will have ruckus on the table. And many of you think APIs were there. What is so new? I think what is new is that you are right now, if you're a tech guy, nobody will talk about APIs. 5, 6 years, 7 years back, nobody will talk about APIs. APIs on open banking are now a concept which boards talk about. So I think that's a difference, that it is no longer a sidekick. It's actually the mainstream of the country as well. Think about other frameworks. Basically, as I said earlier, it was, I think 5 years, 6 years back, 7 years back, and during DCB, I launched a mobile banking app. I'm like so happy we have launched a bank app as well. And now we are getting traction, and more customers are coming in. We are able to create ROI, and ROI was, let's say, 2 months, 3 months. We were so happy. But I think the current generation is not about API as a given stake, right? Table stake. Nobody bothers about it. Everybody has a mobile app. And not that you should not use it. Actually, you should optimize. So one of the things is that everybody thinks is kill the current one and replace something. No, not really. Your mobile app has to become more and more diverse, detailed, well-oriented, simple to use, and all of that. So I'm not against it. But I'm saying that your starting process right now is API first. So you start with a channel agnostic business model and say, oh, my API system, API process will be made available to a lot of developers to work on. And once the development ecosystem comes up, a lot of apps will be built on top of that. And that's how your business will scale. So with UPI APIs available, and with Paytm and PhonePe and Google building apps and many other guys building apps, it has become universal, right? So the idea which we have is that each bank, if they're able to create a grade A set of APIs on their own as well, they can scale. For example, buy now, pay later. Now, buy now, pay later complex will be sort of an API which is not standard available in the market. What if banks offer this as a standard API with which they can partner with multiple platforms, and also on their own, they can go themselves and embed themselves in the multiple sort of customer journeys, which is where the transactions are, right? So
which one?
Sorry?
Which API is not available? You said buy now?
Buy now, pay later, BNPL. Yeah. We'll define it later. Buy now, pay later is basically, I mean, let's say in India, the product was introduced first by company Nitya from Simple. They had built this platform. They currently obviously run this business called Simple, which is basically, it's like payment infrastructure where you are basically able to pay immediately, but buy immediately but pay later. And of course, worldwide, Klarna and others have sort of scaled up a lot in the market. We'll define during Q&A, but largely that's how it works, which means that instead of debiting happening immediately, debit will happen sometime later. And therefore, you are taking some credit risk, but you're also making MDR out of the process, right? Can you make it standardized, right? Or can you make it three AMIs possible on account just like that? So those are the APIs which you can build, and product you can build on top of that. You can actually sort of reinvigorate your lending cycle as well in a very structured manner. So this is what we are saying, that you need to have a team who can build this model. Maybe your current team also has to be sort of retrained to make it ready for the market. What is open banking? Basically, the framework by which through APIs, you're able to build solutions around the financial institutions, and both ways, right? You can actually pick up APIs from third party and embed in your solution. So, for example, in a banking API or payment, you also embed insurance attached to it, and the transaction happened. You are building selling something new on top of that. So it's basically that kind of model which can be built, and a lot of banks are right now building it up. It can be both around inquiry, for example, all the kind of inquiries on the account you can actually offer, and also you can offer as a service a transaction as well. So it can be on lending, it can be on payment, it can be on trade finance, it can be on guarantees. Everything can be offered as open APIs. And when I say open, open doesn't mean really open. Okay, so that's a misnomer saying that, oh, security will happen, somebody will do a fraud. All those controls have to be put in place. It's not that my APIs are available in production and anybody can consume it. No, not really. Even UPI API is available only after certification validation, and there's always a license of a bank or a third party or some regulated entities on the table. So it's not about open, it's actually controlled open. Let me put it like that. What are driving factors? I think there are frameworks around open banking brings innovation. I think when we introduced open banking framework to some of these banks, they start thinking of it. So, oh shit, we can do 10 more things on top of that. And suddenly internal sort of view saying that how I should look at myself suddenly changes to how the market looks at myself and how do I collaborate. So I think the open APIs generally improve the culture within the organization, because and within the organization also, let's say on mobile banking, when you are doing transaction and it's not built on open API, there's a lot of sort of cryptic backend data views and file uploads available. It's always a bad game, right? It doesn't work well. So many of them, when they go for open API for internal process as well, they sort of suddenly change their market segment and they sort of position themselves well. And one other thing which I think we all know that we know that, I mean, Amazon, I think in 2002 or somewhere, they had banned usage of anything other than open API, and they were clear that if any developer was found creating any other way of integration, he will be fired. As simple as that. And that was a message from Jeff Bezos to the entire team that you will be fired if you make this mistake. And of course, the market has evolved as a lot. So there are players like Setu, there are players who like Decentro. All of them are building new economy business models. And banking, for all practical purposes, we are thinking right now, it'll become invisible largely, right? It won't be visible to you and me. It is existing, but you can't see it, right? And when you have an Uber experience and Ola experience, we know that we also like it. UPI is running because we don't recognize it's working. We're also thinking that it happens in the background. There should be controlled process, but should largely happen on the background itself, right? At this point of time, maybe I'll sort of stop for a minute because there may be a lot of questions there as well, and would love to respond back.
Hi, Samir, Chirag here.
Yeah, Chirag.
Samir, you had just mentioned players like Decentro, Setu. So, it's not a question, it's a request. Can you also touch base upon how this embedded finance space is working? And what is the future of this embedded finance space, and how bankers can participate very, very seamlessly into this?
So I think the first thing first, Decentro or Setu and others are helping in the embedded finance framework, but they themselves are not embedded finance companies, right? I'll give you an example of embedded finance companies. Let's say we always give this example of Stellabs. Stellabs is a milk IoT company, but which has gone into lending and insurance for their farmers, milk farmers, based on the data they have. And in consent with every entity. It's not that they're not using consent. It's a properly legal framework to doing it. Or maybe Flipkart able to sort of give you insurance, sell you loans based on the transaction they are doing. And largely what is happening is that the end user where the transaction is where the money is. So Bajaj Finance also grew a lot because they created us in a physical environment, embedded finance through their their platform or their people being placed there. So that's a physical representation of it. Digital representation is also embedded finance. So today, Bajaj has scaled down a physical world just because of that, and so much of alacrity they've brought to the table. Same is the case which is happening. Let's say, for example, InstaCred. Now, InstaCred is embedding itself into the journey and sort of scale up the business. So embedded finance is large because the endpoint entities. Let's say anybody who's running, let's say a car showroom or a car platform or maybe trucker platform, right? For example, let's say you are running the entire IoT platform on which the trucks are running. Now, based on that, if you're able to do insurance, based on that, if you are able to give money to the truckers, both for the freight settlement, as well as for, let's say, paying to the drivers, suddenly everything changes because you are sort of avoiding that fraud, right? Biggest risk which you all carry is that people will use the money. For example, PL, right? Personal loan. In let's say earlier we were giving personal loan 4 lakh rupees or 3 lakh rupees to the customer, and he will spend the way he does. He'll spend on marriage, he'll spend on random stuff. But when you look at embedded finance, you are actually able to source where the origin of transaction is. You know, if he has bought it for liquor, let's say on Madhulaka you has built for liquor, or where's the embedded finance is, or he is let's say he's into seed business and he's buying seeds, and for each he needs lending, right? Supply chain finance. So embedded finance is like embedding into original business model like education, e-commerce, or any other original business where the real need is embedding fintech or financial services into it. And my view is that next 3 to 5 years, we will stop seeing these independent small ticket fintechs at all. Everything will become embedded because that's where the more revenue and the cost of acquisition is also lesser, right? Chirag, you have to also remember that cost of acquisition for fintech is very high. Whereas, let's say if you are already running a let's say car sales platform or education platform, for you the customer already exists, and therefore your additional add-on you can do for your customer is much easier. And you all need to do a good API framework, good control framework, and good data framework, and then suddenly everything changes. So that's my view that embedded finance is going to scale. It's not a fad at all.
So Sameer,
It's a very beautiful example. Actually, you gave of Bajaj Finance. It really brings a lot of clarity. It's just in the digital embedded finance world, it can be much more scalable at a very rapid pace.
Correct.
Sameer, nothing.
Atal, you were asking this question, Atal.
Yeah. So Sameer, my point was that when you talk of embedded finance, are you saying that, you are just adding more and more services on the same platform? Is that what you would say is expansion of embedded finance or something more?
So basically, I'm saying, let's say I'm a Flipkart, right? Forget that. Let's not come from a financial services background. Okay. Go from a let's say Flipkart. Now Flipkart on its platform knows who the customer is, knows where he stays, knows where he buys stuff, what he buys. For all practical purposes, they know exactly in my family who's there, whose age is what, and maybe in some way they may actually have all the data possible, right? Where I'm moving or not, because the app is always up, right? Now they are saying that instead of if somebody wants to buy a product, right? Instead of you going and tying up somewhere and giving me cash and all, what they're saying is in the journey itself for the buyer, say retail customer, can I have a buy now pay later product, or can I have an engagement with him for maybe a card? And they can package all of that in such a way, that beautiful way, that they don't have a high cost of acquisition, but their own journey will be improved. For example, the customer, the moment says he will pay through wallet, argument wise, it can be a normal wallet with cash, or it can be a credit wallet. The moment it says wallet and it's done, transaction is done, it won't fail at all. The customer journey is completely changed. The settlement can happen after 15 days, 30 days. So you are no longer under threat. The boss, if he has to put 16-digit code, he'll then put this pin, and OTP will also come. All that we know that it has not worked too well, right? So that is what they sort of solve for, and then they can increase revenue as well. Now, this is one side. But you think the other side, there are suppliers.
Correct.
Suppliers also there, right? Now, the entire supply chain actually today is paid in a very awkward way. Now, suddenly, if you open this up for funding, you may actually be able to increase the revenue of your sellers, because you are able to get him credit when he can manufacture more based on the credit, which is already transaction data which you have, which normal world will not have. Let's say, for example, I want to figure out what is the order base of your client, or let's say merchant on Flipkart. You have to tie up with them, right? And then get this data. This data is openly available for them. So they will be able to route these transactions. That's why they will scale much more than anybody else. I think one of the reasons why maybe PhonePe scaled first and then became separate entity was because it came as part of Flipkart team itself. So it has that origin, which helps us in scaling up as well.
Understood. Okay, thanks.
Yeah.
Sameer, so Okay, this is Raktim. I'll go ahead.
Yeah, go ahead.
Samir, see, I'm coming to the open banking and the core of it, and I'm just like why banks will adopt, because with the open banking, some more players will join and take away whatever something. So why bank will do? What I understood in the Europe and all, especially that whatever the monolithic bank with the monolithic solutions are there, and customers are have a stickiness in the sense with the bank they already have their utility payment details and whatever all the bill details and all, they can't change the bank, and banks are not also modernizing their system. So that is where regulation is coming and saying, boss, you have to open up. Either you provide this facility or open up so that somebody else can provide. So the point what I'm trying to say, in European and other wherever the banks got automated quite early with the monolithic system, regulation was forcing. Now, in India, if the payment part, the phone pay and this one is fine, but other than that, do you see regulation also forcing some things to the bank that you have to open up, or it's more of a customer-led thing? And Flipkart and all understood there is more of a customer-led, and these companies have come in. Yeah, I'm done.
I think India is largely the market-led opportunity, right? So I'll talk about the other side as well, but market-led is very simple. Let's say I come to you and say let's say you and say I have an opportunity of let's say $1 million to be earned in next 10 days or 1 month or 1 year. The first response you will be, what are you talking about? Is it possible or not? I think that's where the open banking opportunity is. That when open banking will come, it'll kick you in two sides, right? Very, very clearly two sides. Even if when you give loan to the customer, he'll finally buy on Amazon, Flipkart, or in a physical shop. Somewhere he has to buy something, right? He's not going to take a loan to keep it in his pocket, right? Something he will buy. Raktam,
Yeah, go ahead. I've just muted myself. Go ahead.
Yeah. So whatever whenever the money is given to the customer, it's always for some activity, right? Nobody, I mean, he's not taking it ideally situation only for booze, right? And even in days of booze, he has to buy the booze. So what I'm saying is that finally the end usage is always there. In this particular case, the banks have a clear-cut understanding of the usage. They have more data of the customer, and why the banks will do it is because it improves their bottom line. It will basically cost of acquisition for a loan in the country is anywhere. I'm talking about a normal loan is anywhere between minimum 3,000 to actually for a maybe if you want to take a 5 lakh rupees loan, it'll cost you maybe at least maybe 10 to 15,000 minimum to get that source it, do ads, campaigns, blah blah blah. Now all that is gone. Some third party has come with whom you have a tie up, and he's getting you business. Now it is about 2 people or 3 people or 4 people sharing the revenues. And customer is happy because he's getting the better journey and he's getting loan and the instant. For example, I'm trying to buy a mobile, and during the mobile process, I wanted to upgrade it from let's say iPhone 7 to let's say iPhone 12, and that upgrade was possible because somebody was giving me a loan, and that is instant. So customer is happy because he's getting loan on time. The seller is happy because the Amazon is happy because Amazon is able to sell, or Flipkart is able to sell a higher ticket, and customer is happy because he has better product. So the point is, in the journey is possible, but if you are putting it outside journey, the customer has to first take the loan and then do it. Unlikely that he will do it, and therefore there will be a lot of sort of resistance to the process because so the credit on the retail side will not happen. Similarly, on the supply chain side, if you're not in the supply chain side, you will not even know the opportunity itself. And the opportunity will come for let's say only 10 days loan of 50,000 rupees, and you will always miss it if you have to do it physically. But when you are digital and you have done one-time KYC, it will still work. So you should look at the model on which, let's say, Treads work. Treads is also a framework of sort of supply chain, and they are also working similar way. That more data they get, more small transaction happens. So open APIs will solve a lot of such issues which are not viable in the normal world.
Okay, thank you.
Yeah, Sudhir, you had the question.
Yeah. Hi, Samir. Quick question. In Britain or let's say Hong Kong, there are frameworks around Open API like PSG2 or HKMA guidelines around it. So do you foresee any kind of such framework coming and sitting in from the India perspective?
So I think maybe two separate points. One, for account aggregator piece, there are a set of standard APIs which the government or rather RBI has already given and which is in the market. So that is one side. The second side is that we were also pushing for maybe a National Lending Corporation of India kind of framework where some entity comes in between. So while you have NUEs coming on payment side, we were pushing for NUEs on the lending side as well. But irrespective of our framework, there's also a framework called OCEN. And OCEN is also a standard APIs which they have established for the lending segment as well. And if you look at UPI, UPI is also a standard APIs which are made available. So there is some level of API standardization available, but not as much as is available in Singapore or US or in Singapore or in Europe or maybe in London, right? So they have maybe more standard. In India is a growth phase, right? So it's happening irrespective. Even we don't need anybody's push because there's a real business which is happening. I mean, like for example, Federal Bank in last 4 years have grown so much. And with the focus has been that how do we leverage more on open API? So we will see it, but it will take its own time.
Thank you.
Yeah. Okay. So I'll continue with the session. I think just one second. Yeah. So and of course I was talking about the customer life cycle. So we always thought that it's my life cycle. I think today when we say design thinking, it's not because design thinking is relevant now and not earlier. Design thinking is because customer will never come to you any which way, right? Because he's in the journey when he's taking a loan, and no people are lesser people are taking loans of 50,000, 5 lakh rupees. They're all taking a loan of let's say 10,000, 20,000, 30,000. Last year I took at least 3 loans, and all of them were 30,000, 60,000, buying for laptop, mobile, and all, and which I didn't need, but it was okay to take it because it was a 0% EMI, and I still took it and I still paid some interest. But I wouldn't have gone for a 5 lakh rupees or 2 lakh rupees loan because then it doesn't make sense anymore in the current world. This is largely the open banking ecosystem in the country. I'll not try to define going through this. I'm sure many of you have seen in the previous avatar as well. And it is also available in the new report as well. You can sort of download that. Maybe the new report link can be given to them. They can also download all the ecosystem. So Maitri or Chetan, you can actually share it here.
Sure.
Yeah. Okay. So as I said that the base framework of any banking as service. So when I say banking as service, I mean banking as service, NBFC as service, or lending as service, or insurance as service, or payment as service. All of them are like service, or trade finance as service, which not too many guys are talking about. So banks are obviously the license holder. They are the one who have the capital, and they should be the one who will be driving the most of it. And we have seen many banks sort of within India and outside India sort of picking it up. Even we're now seeing even PSU banks sort of leveraging that as well. So it's no longer about only top 3, top 4 private sector banks. In terms of the platforms like Galileo or Zeta, now everybody has a slightly different role. So don't try to ask me a question that YAP does this and Galileo does this. All of them are slightly different from each other. But basically, they are simplifying access of APIs and the platform of business. For example, let's say Setu is able to help and simplify, let's say, account opening process, or maybe FD opening offering, or maybe you're able to solve the problem of, let's say, collection. So they have simplified BBPS in the country. So can the customers go directly to the bank? Answer is still yes. But the journey which he will or she will get on the bank side and the time it will take for NDA sign up, maybe Setu is able to simplify it. Basically become the end point to simplify this journey for their own customers. And these are not retail customers. I'm talking about these are also platforms. Let's say if you're a lender and you want to collect sort of through BBPS your EMI, if the EMI is delayed, you want to ensure that you get this access to this money through, so that you can talk to the customer saying that you want to pay the loan. If you're not able to pay through EMI directly, why don't you go online and use your phone pay or Paytm and pay on that? And there you can find suddenly that, okay, XYZ NBFC is also listed and you can make payments. So Setu is trying to simplify or amplify BBPS for the country as well. So there are some examples. I'm not again saying this is right or that is wrong. Some of them have a different role, but mota, these are the entities which are in between solving for these issues as well. And then there are retail neobanks like a Yellow or a Chime and or a Neo. Neo, you are seeing a lot of ads these days in television during IPL as well. So they were trying to say they have a partnership with Equitas, and they are trying to bring the retail bank out there in front of you, in face of you. And basically, they are offering a retail customer experience in a sort of very digital way, and also adding maybe wealth product as well as part of it. So there is a business model which can be created, but that suddenly they are able to open maybe 50,000, 1 lakh accounts in just 1 month, which is again shows that the skill you can get if you are able to improve the product. And of course, do some bit of marketing expense as well. So open banking on the retail side is changing a lot. And I believe that since there was a KYC rule change a couple of weeks back, actually on 10th, actually only 1 week back, 8 days, 9 days back by RBI. Now with the video KYC, now even the proprietors can open accounts, even other entities can. Now I believe that anybody who's trying to build open bank on MSME side will be able to sort of raise more lot of fund and create a lot of value. And this is a pointer I always believe is that as a banker, I always thought that internet banking is the place where people go. Actually, they don't go there. They remain in their sort of platform like a Zoho, where the accounting and invoicing is done. And that's where that's the real need of MSME. The real need of MSME is definitely not internet banking. They would want that process to happen in their platform, which is what Bank Open or EZO and all of them are solving for and trying to provide them a platform or integration as part of their sort of Zoho kind of platforms. And of course, a lot of banks are also launching their own digital banks. I think we largely, given that we have positive time, maybe I'll focus only on maybe one pointer, which is how to sort of assess. So this is our strategy, and this is how we approach for our customers the whole digital strategy, open banking strategy. So basically, I mean, a lot of banks say that, oh, can we start by open banking from tomorrow? And can we compete and take a head-on with a Yes Bank or Federal Bank? That's not possible, right? We have to be careful about what sources we have. So is your platform ready for APIs? Is technology-wise, process-wise, people-wise, are we ready for APIs, right? If your APIs are not there technically, it's an issue. If your compliance is definitely against any partnership, and which happens all the time, they will always say no to every regulation, every change of the market. So how do you ensure that internally? So we do typically an sort of assessment of the bank's own readiness internally. We also try to figure out sort of what kind of landscape is there in the market. And not just today, maybe a year or two later. We know, for example, KYC process were definitely on the card. We always were saying that the APIs, KYC regulations will change because of COVID. We knew that it will change. It is just that timing was not known. Maybe the second wave was the one where it happened, but we could almost estimate that this change will happen. So redrawing the ecosystem based on next 2-3 years and figure out what is the position you want to take. So a lot of people want to fight in all battles everywhere, right? So you have to figure out where the battle is. That they can say that some of them will say, I will focus only on the payment business because that's where I don't have lot of capital on my side. And I may not have enough liquidity, but I can play on payment side and I will scale that business. So that's what they can do. Maybe Yes Bank became large in this business. Or they may look at merchant acquisition as the biggest thing, or they may look at let's say lending as a big thing because they have a lot of books and they want to partner with a lot of not just neobanks. They want to partner with a lot of lending platforms and maybe Facebook, Flipkart and all to lend. So you can figure out where you want to lead on open banking as well. And of course, behind all of that, you have to come back finally with the open banking sort of roadmap. What do you want to do? So when you say roadmap, it's about also figuring out what is the KPIs you will have. What kind of revenue? So our thought process is that maybe in 3 years time, 4 years time, any bank which gets it right will be able to at least add maybe 20-30% additional revenues through these journeys. And it can be reverse also that maybe you will lose this 30% if you don't do it. And we'll talk about it how. But that's largely we see many of these banks aggressively going on it. And also when you become very effective on API basis, your backends dramatically improve. Because what will happen is when you were calling third party with an API, you won't wait for it for 10 minutes for somebody to work on it manually. So what happens is when you start working with APIs and structural changes happen, then backends and people and the training will change. And what will happen is those processes which were manual by nature and had limited control were not scalable suddenly become scalable. And entire thing goes in a dramatic shift, right? So I think we do see a dramatic shift on this side. And of course, then the rollout process again, step by step, what will we have to do first? Maybe we need to just pick up one segment. We have to pick up one product, one partner, and also try to figure out that we will do a point-to-point integration initially, or we'll set up API gateway in between, which will enhance and improve the sort of onboarding journeys for partners. We will set up a sort of developers network as well around that. So these are things which we typically do. And this is just a representation on top of that. Shashank, you're back.
Samir, I'm there, but still it looks having a challenge.
Sure. Okay. So I'll continue. So I think this is just a representation, right? This is how typically a bank will look, right? It is my own product, own operations, own finance. This is my own platform, own journeys, and my own product sales, right? All of that is my own. But when you go into suddenly on a open banking framework, what you're saying is that you need to have own platform. Open banking platform itself is a money maker. You need to have API enabled services as well on top of that. So you have to figure out what services you will need. You need to have partnership with corporates, right? Corporates will be sort of, you start, for example, let's say you go to HUL and say, oh, I have an APIs for this and that. And suddenly their transactions, their lending, their employee lending, all of that can be embedded into one structure. And maybe HUL will look like almost like an embedded finance bank, which can get you merchant access, which can get you access to all the other opportunities there in transaction side also as well, when somebody is buying and selling as well. So you need to have that partnership. So you have to look at third-party apps, fintechs, Flipkart equivalent, Amazon equivalent, wherever there's an actual journey possible, and you build partnership with them. And of course, when I said it's like operations also have to be comfortable working with them. So there may be a collaborative approach. Some part will be done, operations done on your side, some on the third-party side. For KYC, some component done on this side, underwriting, some component done on the other side. The reconciliation, compliances. Typically, where the mistakes happen is that recon, compliance, all of those things nobody wants to care about, because those units which are running, they're not very happy with this new element coming, and they will say, oh, 30-year-old guy, how can he get it up and running? He can't do it. And today, if you look at, you and me both look at it, we all follow what Sachin Bansal is doing with his Navi, right? And we are all worried that what he will do and how banking will change because of him. But imagine, he has built this company on scale, right? So I'm not saying that bankers are pushing back, but I'm just saying we have to also understand that market is changing. People are any which way digital. So how do you ensure that you partner more? So risk governance, all of these units have to also adapt to these changes. And of course, when you do it, the culture has to change. You need to build a monetization layer. You need to figure out how the money is made. It can't be that I lose, you win. Both the parties have to win as well, right? So how do you put it? How do you put tech side? How do you put ops side? All of those layers, structure, sort of maybe governance to culture change. All of that is part of the whole framework. And that's largely what we are saying. So we'll not spend time on, I just thought that may be useful for us to just focus on the first element first. And yeah, any which way, I think the training is coming up, which is on 19th. Again, you can look at that as well. And you can give feedback. Basically, in the training, we will talk about the open banking piece, the deconstruction, how the APIs are created, what is the business model, what is the monetization framework, what is the typical architecture. It's a one-day course. So typically, we used to do 2-day courses, but I think during pandemic, a lot of pressure is there on people. So we've avoided 2-day training anymore. So we are right now doing all 1-day training. And it's about global views. So we'll give you a bit of a global view. We'll also give you driving factors, frameworks, life cycle management. For example, a lot of times people do not know how to manage the life cycle, and they keep changing, but they don't know that on that sort of framework, 10 more entities are running. So you need to be careful about regulatory framework, data protection. For example, the bill is coming. How do you ensure, how will the impact of that? There's a framework, API testing. So there are thoughts which you should know about. It's sort of early stage session for us. If you don't know anything, this is a good session for you to sort of look at. It'll be interactive. It'll be on Zoom. We will all chat. It is very similar to this one, but maybe because it's a full day we get, it's all far more interactive. And of course, this time, these are not all the speakers which are coming. These are the previous speakers. And I think Vivek is also coming this time. Shizak, who are coming this time? You there? Okay, I think he lost again. So we have also coming we have getting 2 speakers, one purely from banking community as well. So Vivek will be joining us. And on the side, there's another gentleman, Vipin, and he's also running an MSME open bank as well. So we wanted to bring 2 use cases as well in front of you in that particular session, which is on this Sunday. And yeah, and of course, if you're looking at consulting as well, we do a lot of work around this. So if you are building a use case, or you want to figure out monetization, or you want to evaluate the platform as well, or you want to train your teams internally, a lot of times we end up training internal teams as well around that. So you'll be happy to sort of work on. With this, we move to a Q&A session and would love to sort of hear you out. Again, as I said, we may not know all the answers, but we'll attempt. There's no real sort of real copy available saying this is how it works, but we'll try to answer whatever we can. If we not, we'll say nahi pata, kya kare. Over to you guys.
So Samir, quickly, anything on the trade finance? Yeah, you mentioned of that. So for the trade finance and opening up, leave the trade connect and all, which the other companies are. Any other example you have seen? Really, I know the Dubai smart contract and all were there, but apart from that, anything else? Yeah.
So in India, there's a bank which is attempting. I can't share because I have a bit more sort of internal knowledge about that. But a bank is building a trade finance related open platform as well, and which is to ensure that because once they get it up, they will be first in the market to do it. So they're right now building it up, also figuring out how the backend process and approaches can be dramatically improved, because otherwise the delays can actually kill. So that's something which we know is working. Not too many guys are doing it because of the complexity. I think some banks are building only the trade finance digital journeys are just getting built. So OpenAPIs for many is slightly away. But yeah, that's where we are right now.
I had a question, Samir. Thanks. It was a wonderful session. And one question which I had is, you mentioned something about data protection over here, and a lot of APIs are actually dependent on data. You're sharing data from one person, one corporate to another corporate, and there will be laws on it. So what is the policy on this data protection, which usually banks follow?
So it's very simple, right? Whatever policies exist, they're all saying that customers should be able to give consent to you and telling for what purposes they are giving that data for you and what you can do with it. And that's a structure which is available and used in even in GDPR base as well. And also when your data is shared, it can only be used for that and that work. So it can also be said that the bank can use it for only, let's say, lending and maybe one more activity and for only this period. All those structures are already laid for or are getting enabled. Even when you look at our account aggregator framework on which the first consent layer formally will come or is coming. Also talk about utility, what for data will be shared, account statement data is shared, for what duration, what purpose, and all that is control is there. So this GDPR, whatever is already available, the framework is already available. Everybody knows what is going to come. That bill is already known to us. When we are building this journey, we have to ensure that those journeys are built with those frameworks in mind so that we don't, that document is available to everybody to read, right? So it's important that we read through it and build our solutions around that rather than cut short and then sort of face problems.
Okay, thank you. Thanks so much. Thank you.
Yeah, and Faizan, you had a question, so please go ahead, Faizan. And anybody else has a question,
Yeah.
or you can raise your hands, please.
Yeah, Samir. So firstly, thanks for this session. My question was specifically pertaining to SME Neobank. So
just one sec. I think I can't, since I can't see any screen right now on the backend side. So please share the feedback form to everyone. If anybody is looking at this presentation itself, you can share your feedback and we'll share the document back to you. The presentation will share back to all those who will give the feedback. So I can't see it, therefore I can't know. But hope Maitri or somebody has shared the feedback form, please.
Yes, it is shared.
Yeah. Okay, please fill it up, please. Thank you. Let's go.
Yeah. So Samir, just continuing my question. This was regarding the SME neobanking space. So the way neobanks are functioning in India with respect to accounts that they are providing to the merchants that they're onboarding is either they're using the aggregators using their own current account with banks, or some of them have specifically tied with one or two banks through which they're able to open accounts with that banking partner. So what I wanted to understand is twofold. Number one, outside India, how do SME neobanks function? Like, are these aggregators authorized to open accounts, or they have partnered with multiple banks, or they have partnered with one-on-one bank, specifically? And second question is, what do you see the future of it in a brief manner in India? That do you expect banks to open up where they are able to offer these accounts to these aggregators? Or do you think, there could be a potential capture of, wallet share, which these aggregators can take away from banks?
I think let's also so let's look at the world, right? In the world, let's say I'm a small bank, right? Very small bank. For me, customer acquisition is important, and I will tie up. The large player will say, I am going to compete. I am not going to give any space to anyone. So it's largely related to a placeholder you are in, right? So for example, we are right now entering Dubai sector. I mean, Middle East, we are entering right now. Now we are very small, right? For us, we would not be able to work. I mean, for example, for a 15-member team, we can't enter with that huge investment, right? So what we are doing, we are working with the partner. It's a logically the same way. So if I was like 100-member team and my revenue is like 100 million, I would invest in the market and grow, right? So it's a location, the situation people are in now. So that's one part, right? So you will basically work with someone who sort of get you scale. Today, if you look at on the retail side, Neo has partnered with Equitas. Now, for all practical purposes, Neo would be generating maybe double the number. I don't know the number, so please don't quote me everywhere. But I'm just saying, assumption is that in a month's time, Neo may have given more customer to Equitas than they would have gotten through their own branch itself, right? So it is a situation people are in. Now, one entity, will it work with multiple entities? Answer is yes. You can actually structure it in such a way that for one entity you will sell one product, and all entities another product. And again, when lending segment, it happens all the time. Why not in savings account? Why not in current account? It would work as long as we are ensuring that there's no mix-up of data, there's no sort of control issues, and all of that is taken. It should work. So I do believe that multiple entities may still work. And you also have to realize that when you are working in multiple entities, so even when there is any risk, I mean, tomorrow the challenge with the fintechs run is they have partnership with one bank. Okay, and that owner takes a different view on you. You are dead. So BBVA took over Simple, which is the first digital whatever open bank in US. And the day they got they sold off to somebody else, and then finally they had to close because the new acquirer had different vision, maybe, or maybe they wanted to acquire. So the point I am saying is that you may take a view based on where you are, and as a fintech, you would want to work with multiple so that you can't have a single player dependency and risk attached. Similarly, bank will work with multiple players so that they can also ensure that they are not at risk of working with only one.
Understood. Thanks, Samir.
Thank you. Thank you. Yeah, over to you, Chirag. And again, I think feedback-wise, my request is.
Practically speaking, वो SDN वाला issue का देखना पड़ेगा यार. अभी LP movie का 5 million का volume है. वो उसने अभी stop करके रखा है.
Guys, can you somebody please put them on mute, please? Yeah. Yeah, I think next is Chirag. Chirag, before you go, again, from feedback perspective, please provide us feedback and share you the document as well. So over to you, Chirag.
Yeah, sure, Samir. I have filled the feedback. The couple of quick questions. So can you give me any pointers on any kick-ass platform or journey or evolution which has happened in the merchant acquisition framework? So any interesting journeys for the POS merchant by POS acquirer? And second, any pointers on interesting seamless journey in the credit card domain by fintechs or NBFCs or banks?
So I'm not able to hear much, but the first question I will answer on the merchant side. So what has happened is on the merchant side, there are players like a Signsy. Now Signsy was doing journeys primarily focused only on let's say earlier on KYC. They moved on KYC. They did more journeys, and they were able to sort of scale the merchant side. They have also partnered with MasterCard as well. So I think journeys are built by all these players, which are also on RegTech side. So they are sort of so they are coming from other sides saying that I can build these journeys. And I know many software companies are also building similar journeys, end-to-end onboarding journeys as well for merchants as well. So there are players which are doing it in the market.
Okay, thank you.
Thank you. Thank you. I think we still have maybe 5 to 8 minutes, so we'll be happy to take any more questions as well. Any questions, Shashank, we have got on the chat?
No, Samir, I think it was last Chirag.
I think on the chat.
So, Samir, I will just.
Yeah.
Samir, any technology?
Just one. I saw a few questions coming. Yeah, I think Saurabh was asking that account switching, will it be possible in Indian context? I don't think it is required anymore, right? I think the framework is, you can always move money and open account easily, right? So Indian framework is much easier to work in than in most other countries. So account opening is not the most biggest worry we have. You can always open account just like that, right? I mean, really, I mean, we were doing this customer journeys for one bank. To give comparison, we ended up opening 3 more accounts, and I mean, maybe not 3, actually 7 more accounts on the journey side. And you learn it's not that difficult. So I think account opening is not the most important part. I think unlike US and UK where there are charges, this and that, India is much easier. Yeah, Raktim, go ahead.
Any technology player which you know which are good in this open banking and providing? I'm talking of technology players.
I think pure development side, if you look at the ecosystem, we have named few of them. If you looked at, but Catena guys are very good. They've done this work with multiple entities. Of course, I'm not into sort of push for only one, but there are other places as well.
Which one? Sorry.
Catena Technology.
Sorry, Samir, I missed the name. Which name? Oh, okay.
Yeah, Catena is there.
Anything on Mambu and all you are hearing?
So Mambu is on the other side. Mambu is equivalent to a core banking platform like a Fintech. So Mambu is on the other side. They basically created open API based core banking. So I think you were asking this question, right? From open banking, how critical it is. Basically,
yeah.
The platforms will be getting sold primarily on the availability of open APIs, because customers are saying, I'll build more journeys on top as long as you can give me these as a microservices. And I'll build the framework on top, right? So I think that's where the movement is happening. Mambu has been able to make inroads even in India based on that framework.
Okay, thanks.
Yeah. So I think that's about it. There are no more questions, but happy to take. I mean, if you have any questions, you can always reach out to our team. And maybe I should share the screen as well, right? I have not shared the screen. So yeah, you can reach out to Shrikant for. So if you're interested in our Fintech Bazaar as a buyer or seller, you can join on 26th. So you can reach out to Shrikant. If you want to, I mean, if your company is looking at any kind of open banking related focused training consulting, we would be very happy to do. And of course, the training is right now coming on this Sunday. You want to take it. We're happy to have you on board. With this, we close now. Thank you guys. See you. Bye.
Thank you guys. Thank you.
Thank you.
Thank you.
Thank you, sir. Thanks a lot, Samir.